Yeah! All right, good morning. How you doing? I think I'm running a fever. I'm freezing cold. Yeah, it's 100 degrees outside. 36 Fahrenheit, eh? All right. There we go. You guys about ready? Yeah. Hey, we got some GDP. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right, let's start with some macro. And then we have, the news coming out. So we just have a time. Just enough time for a quickie on the macro side. So let's just get a quick review here. Once again, as you know, I cover fundamentals in great detail every morning before this live stream on YouTube. So we've already gone into some details and talked about some cool things. Right now that we're showing a little bit of a risk on, we do it on 3 time frames when we do the risk gauges. But right now, as far as today, there's somewhat risk on. Platinum and copper, silver, so commodities seem to be doing well. Yeah, Russell's a little bit of a dip. S&P 500 is flat. Gold is, but these had some risk on yesterday as well. We analyzed the 2-year Treasury market. We analyzed the options market. We did a bunch of things. We did some price forecasting. We have this thing called GDP, and you go to economic activity, and at least you can see the history. Let it load. This is a database. It's It's not just a static website, it's a database. Load. You can see it's still loading. Come on, Bubba. All right. That's a bit slow. Come on. Let's try the world's oldest trick. Let's go to claims, which are also coming up. There you go. You can see we've been trending up for quite some time on claims. Let's go back to GDP. Golly gee whiz, it's not loading GDP. Holy smokes. I think we've had a problem with GDP before. Probably the data provider if it's not loading it. Huh. Well, hell's bells. Yeah, it's just not pulling the data. Interesting. That seems like it's a service provider issue, not us. It's like we pull it. So is it from the Fed or are we getting Bureau of Economic Analysis? Somebody's API seems to be down. So that'll get up and running in a second. We got time to get some headline news. Let's do that. Full slate of data coming up next. The US dollar is lower on concerns about Fed independence. Euro US dollar and pound US dollar break to 2025 highs.
Germany, a big budget for big challenges, Nomura.
Gold benefits from a weaker US dollar as pressure over Fed rate cuts builds. FTSE 100 rises 0.4%, 3i Group climbs nearly 5%.
Cautious optimism in world markets.
Oil prices rise as bumper U.S. inventory draw points to resilient demand.
Russia says it wants Iran to keep cooperating with UN nuclear watchdog. Mexico trade balance SA, though down to 0.059B in May from previous 0.083B out. No love for the dollar as markets fret about Fed independence.
3 minutes until our GDP. We have some durable goods in there, but that's too volatile to really care about. We do want to look at the trend here on our continuing claims, but that, 240, anything around above 240 is on trend. Quarter over quarter, sure. Okay, so is it right? Is it negative? Right? We don't really want a negative GDP, do we? So after the news comes out, we'll take a look at the markets and see how it reacts, and then we'll go through our routine of looking at USD, Euro USD. We'll look at gold. We'll look at Bitcoin. We'll look at treasuries, so on and so forth. Then we'll do our viewer's choice. Give you a good warm up before the markets open at 9:30. So let's see what you guys responded. How you guys responded, let's say. And mixed bag, huh? Higher, lower, and as expected. Well, maybe that's since we're not able to pull. Since we're not able to pull the GDP data, maybe that's the issue, huh? Too bad. Let's see if we can get this. No. Shock. Oh, there it is. Yeah. Okay. So you can see numbers have been a little bit low. And when you break it apart, you can very easily see whether it's imports or exports. Definitely related to trade tariffs. 51 seconds. I look at yens every morning, Don. Actually, I look at yens multiple times a day. Mm-hmm. 15 seconds. Wait for it. Oh, negative 0.5. Wah, wah, wah. Yeah. Wah, wah, wah. Ooh, oh, oy vey. Oy vey. Let's do it. Yeah, do that. Measure the initial reaction. You can do it off that or that. Just see. Now, this pink zone, now I believe it's actually salmon. This salmon zone is telling you the best time of day to be trading. Real is a minus inflation. Nominal minus inflation. Okay. So this is the best time of day to be trading. This is the best time of day to be trading. So it turned blue here and you should be game on. It turned pink here, half an hour ago and you should be game on. Game on, Bubba, game on. Okay. Okay, that's the initial
United
scalp.
States gross domestic product price index came in at 3% above forecasts 3.7% in 1Q. United States goods trade balance registered at 96.6 B, below expectations 88.5 B in May.
United States personal consumption expenditures prices, QOQ, registered at 3.7% above expectations, 3.6% in 1Q.
United States durable goods orders ex defense climbed from previous 7% to 15% in May.
UK retailers expect sales to fall sharply. In July, CBI, ING flags potential euro path to $1.20, but sees policy triggers as key.
So all that data just came out in the last minute. You've already been updated on durable goods, on subcomponents of GDP, like consumption and all that kind of stuff. Isn't that amazing? All while, keeping our eyes on the charts here. Yeah, well, there you go, Samu. So if you were worried about that rolling into Canada today, this is where you could, start putting hedges on the stock market, for example. Right? Or accumulate cash for investment later in the year. That's another way of doing it. Yeah. This is right on schedule. Perfect. Well, we talked about in January, for crying out loud, huh? Yeah. Oh, there we go, Bubba. Bum, 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 bum. Yep, 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 yep. But again, when you look at it, it's not your normal GDP. There's something clearly unusual going on with GDP. And that has to do, obviously, with the trade war. Yep. Yeah, Don, that's reasonable to think. Yep. Yeah. Risk off. Well, think of it like what Don's saying. If you wanted to accumulate anyway, then you're already thinking about prices to accumulate. So let's say you want to buy some more. I already have the buy zone, but let's say you wanted to buy some more NASDAQ. Now you're just considering at what price. So some people might have buy orders here at 22, but then others are measuring, you know, um, how do you say it in English? Other things. Um, the trade plan for the day, if you understand basic day trading, this was the buy zone, and this was the target. So another way of looking at it is, it was buy the rumor, sell the news, and then others want to accumulate later, so they might buy here. Now, I think it's a better price here, but nonetheless, what they're doing is this is day trading for other people. So they're looking at the low to the current high to the next low. And so this, for others, the opportunity is this, right? You just like anything else, you're buying waves if you're going to be an Elliott waver, okay? And, there you go. If you use price action, there you go. If you use pivot points, there you go. So all of a sudden, they're all the same. If you're using moving averages, there you go. Okay. So if you're a bull, you want to see this red candle. Where amateurs go and make mistakes is they see the red candle, so they think sell. Well, that's not what's happening. People sold high. Amateurs sell low. That doesn't make sense. And meanwhile, what just occurred? Well, bulls bought low. And just like Don Pablo said, hey, well, doesn't that mean the Fed's going to cut? Yeah. And so for some, that'll allow them to buy.
U.S. durable goods orders rise 16.4% in May versus 8.5% expected.
United States wholesale inventories below expectations, 0.1% in May, actual 0.3%.
United States continuing jobless claims above expectations, 1.95 in June 13th, actual 1.974.
So, what I was saying before I was so rudely interrupted was you have to have a strategy. And the strategy isn't like, sell it quickly because the news was good or bad. There is no good or bad. And yet you have to understand behavioral finance. Bad could be good and good could be bad. So bad isn't always bad and good isn't always good. Okay? So instead, what you should figure out is whether you're bullish on the stock market or bearish. That should be a much easier thing. And in general, okay, in general, I'm bullish the stock market. But I'm concerned about bearish appearing. Okay, well, is it appearing yet? No. Okay, so in that case, if I'm still a bull, or as Don suggests, hey, doesn't this mean the Fed could cut and therefore be bullish for the stock market? Yeah. So what do you think about the red candle? Love it. So like I showed you, with a little bit of analysis, if you use moving averages, you'd buy a dip. If you use price action, you'd buy a dip. If you use pivot points, you'd buy a dip. If you use Fibonacci, you'd buy a dip. And amateurs just, I don't know, chase their 1 minute candle and try to make a quick buck. Well, that's kind of, but if you're going to do that, you might get a second chance. Okay, you might get a second chance here. So now you could do the inverse fib of fib, maybe get another little chance. I'd look at this roll reversal, I'd look at that roll reversal. But I think the bigger money bought here. Done. Done. Just like that. Yeah. Yeah. And so at some point, you want to decide, are you going to try to trade this after the fact and do this kind of stuff? That's okay. Or do you prefer to stay strategically bullish and buy a dip where there's 3 or 4 or 5 technical reasons to buy it? Okay. And so the next level of accumulation is really down here near 22, as I've already covered. Okay. So now if this fails, so let's say this does head down, because I don't know. Okay. How would it work? Well, technically, probably fall down to the 55. Then it would come up, and then technically probably come to this area. Okay. And then technically, you would measure the top of the crown, right, to the neckline, and that would get you to here. That gives you a head and shoulders, and that gets me into the new buy zone. So bulls will probably try to buy here. Yeah. Yeah. So instead of being reactive, what I teach is that you're ready in advance. Help me analyze this. Is this chart bullish or bearish? This is a 1-hour chart. It's not even a big deal. Is this 1-hour chart bullish or bearish? Yeah. So, right. So you bought a dip, right? Simple. All right, let's get on with it. Let's take a look. Okay, let's go through our routine. All right, euro dollar, euro dollar. Are you a bull or a bear, son? What do you stink? Bull or a bear? Well, let's use our technical radars for such. So
US
I'm going
initial
to
jobless claims fell to 236K last week.
I'm going to zip over to, well, I might as well show you. So I'm going to zip over to our technical radars, leave our GDP. And I'm going to go to settings, and today we are going to look at euro dollar. Okay, of course, we have everything else, of course. I mean, you can see this very well. I mean, yeah, we cover all the majors, all the yens, all the Swissies, and all the cross pairs, and a couple of exotics. We cover quite a few of the stock market, right? The top 20 traded stocks in the world. So if you're like, man, I like Tesla and Nvidia and Apple. Oh, well, we covered all of that technically as well. Oil's moving. We have Chevron and Exxon. I like a Google. Okay, great. We have all that stuff. Right now, we're just looking for reversal patterns and trending. So let's go to the euro dollar Forex. Yeah, here we are. Back out a little bit. Zoomed in a little much. Okay. All right. What do you think of this? Euro dollar. Yeah. Well, long term long, short term concern. Okay. But here we are on the long term, on the daily. Okay. Okay. On the daily, we have, right? Remember, you're supposed to be doing a SWOT analysis. Okay. Strength with an opportunity. And this gets us to 118.5, but it depends on the velocity. If it takes a little longer, we'll go a little higher. Yeah. And then right now it's saying, look, even with the higher high, we need to start being worried about vulnerability. And it's saying a higher high could create a higher low on the smaller time frame. Maybe. Okay. This came out 16 minutes ago. Maybe, the consolidation around the news through this pattern up there, and now we extend through. So maybe, but just realize, right? Long-term bullish with an opportunity above us seems okay in the moment. So you would buy dips. Now, I also teach you can use the bottom of the channel. You could use the moving average. You can use roll reversal. Okay. Yeah. Nonetheless, down in here around this, 116 was a buy, and off we go with the target of 119. Right. So this isn't really a target, right, Jim? This target here, it's not really a target. It's the presumed at this rate of change, presumed resistance in the next leg. But this could rise for 3 weeks, right? But then you'd have the down move, and then it would show you a down target, and then it'd show you the next up move and all that kind of stuff. So it's just really a measure of the next leg in the pattern. But this is a trending pattern, so it could continue like forever. So anyways, it's just. But you got this heads up 2 days ago. 2 days ago, and it's still going up. Yeah. All right. Mm-mm-mm. All right. All right. So let's go to the next one. S&P 500. Oh, I see, Jim. You were talking about. Okay. S&P 500. Everybody, what do you think about the S&P 500? Does it have good opportunities? Up, down, sideways? Well, we're considering reversal patterns, up trends, downtrends, sideways trends. And we're looking at 5 different time frames, and right now the S&P 500 has no opportunity. There's no pattern. Just pattern recognition. We're not doing technical analysis. You still have a job. But just realize you might be bullish, but today, right now, you should be a little concerned and go, all right, well, my technical analyst doesn't see
Fed's Goolsby. Prior to Liberation
anything.
Day tariffs, it seemed the Fed was on solid ground. U.S. GDP falls more than previously estimated in Q1. U.S. durable goods orders soar much more than expected in May.
Okay, so no reversals, no trends. It's not up, it's not down, it's not sideways. And so you kind of need to wait for the market to develop into something better. So you could check this 3, 4, 5 times in the next 3, 4, 5 hours and see if anything pops up. Now, if you happen to be a bull and then suddenly you see bullish trending patterns on a 15-minute chart or a 30-minute chart, now you game on. If you're a bull and then you check in, you every so often throughout the day you check and you see all of a sudden 15-minute, 30-minute, 1 hour bearish patterns, then it's a threat. Okay? Well, Don Pablo, nothing overwrites seasonality. Okay? Seasonality is just, imagine it's normality. Just call it normal. Right? There's never a time when you should not know. Boy, a double negative. I'm really in uncharted territories here. But how about this? You should always know what's normal, what normally happens. And it should be the basis of everything you do. Otherwise, you should launch a hedge fund called Abnormality. Whatever's normal, we do the opposite. Okay. So you need to know normal so you can at least understand what is abnormal. But I never override seasonality. I just understand if I'm doing something that is unusual, then I might be trading it technically, but without confidence or conviction. I just, tiptoeing through the minefield. I'm, opportunistic. Okay, opportunistic. So, randomality. I like that. Randomality. So just think you're either trading normality or you're trading opportunistically. Normality, I can analyze things 12 weeks in advance. Opportunistic could just be changes in sentiment, changes in interpretation of monetary or fiscal policy, geopolitical risk. But I don't know how long that lasts because it's not normal. So, but it is an opportunistic thing. Okay. 10-year T-note. Okay. What do you guys think? Have you looked at the 10-year Treasury today? What does it show? Bullish opportunities, bearish opportunities? Does it show risk on or risk off? Nothing. No bullish trend, no bearish trend, no sideways trend, no reversal patterns. Thank you, Mikhailovich. And so, does it show you that it's a great trading day? No. But again, if you wanted to swing by and look at this throughout the day, now it says stocks, but I'll show you. Out of all these stocks, we have ZN as well. It's just thrown in with the stock market, but ZN is the 10-year treasury. So now I can change and say add other patterns and see if they exist. And no. So just be careful. So you could be trading technically. You could be scalping. You could look for longer term entries on things. But it might be a day where, again, you're trading something technically. We're not doing technical analysis here. This is only pattern. There's just no pattern. So you can trade it technically, but have weak conviction. That's all. So you either are happy with the 30 pip scalp, or you're happy making 30 pips and jamming your stop at break even and see if you get lucky. But you have no, at least based on patterns, you have no rationality for having strong conviction. Now you might on the fundamental side say, well, I have seasonality on my side, I have macro on my side. Okay, great. And you might have a technical trade, and you're like, okay, great. And then you understand that there's no pattern behind it. So it's a level of vulnerability. It's just we're looking at it so many different ways.
Fed's daily U.S. labor market is solid. Not signaling weakness suggests slowing. Fed sparking. Fed policy is well positioned for where economy might go.
Okay. Yeah, so those headlines, there are things coming out like right now. That squawk box is awesome. So you never take your eyes off the chart. Hey, trader, did you hear the news? Okay, never take your eyes off the charts. Huh? All right, so what do you think about Bitcoin? Let's take a look. So I looked for 20 patterns on 5 time frames. Actually, that's not true because I just turned on a bunch of other patterns. So we just looked at, let's say, 30 patterns that might be present on Bitcoin on 5 different time frames. So I just did 150 charts and it took me 1 second. Maybe you're faster, but probably not. So anyways, on the 30-minute chart, 1 hour ago, there's a threat to the uptrend. Okay, so SWOT analysis, my friend. Strength or weakness? Does this show strength or weakness? No, there's no sideways. Strength or weakness? Okay. It's a channel up. It's strength. You guys shouldn't be getting these wrong, by the way. If you look in the description below the video on YouTube is a free download so that you have a cheat sheet. You can download them, print them out. I swear to you, it doesn't put you into a sales pitch. It doesn't put you into a funnel and then I, get you excited and I nurture you and then I give you a sales pitch and I get you to buy something. No, I just give you the stuff for free. If you don't understand the value, I can't convince you otherwise. Okay, you're either amazed by traders.com and you're like, this is how I want to trade all the time, or I don't get you. So I don't think I need to sell you. You're like, no, Wayne, I like trading blind. Well, guess what? I can't convince you otherwise, right? Okay, so that is strength. So is this an opportunity or a threat? No, this is a threat because it's showing signs of breaching the lower bound. So let's zoom in a little bit, or a lot. Okay. So it's an if-then statement. Okay. So if we breach this and we hit here, then that's a real threat to the uptrend. Okay, so be aware. However, if you are a bull, you need to be zoomed in here. And if it turns bullish, boom! So now you're looking at Bitcoin on like a 5-minute chart, 15-minute chart. Okay. So Lewis says, would wait? Yes. Yeah, totally agree. But you should be ready, willing, and able. Because if you know how to trade this, you understand that if this support holds, you should get long. This is saying if it drops, then that is a massive breach of our current pattern. And then, in fact, you should be measuring the top to this bottom to a lower high. And then what will happen is, over time, this pattern will be taken off of TRADARS, and you'll be put
US
into
first
some
quarter
sort of
GDP contraction revised to
bearish channel.
0.5% versus 0.2% expected.
Russia's central bank reserves dollar increased to 600 when feed the YC going to be from previous 682.8 BWA.
US dollar INR slips as Trump criticizes Powell. DXY drops to 3-year low. US stocks may move to the upside in early trading.
Bay Street likely to open on positive note.
All that stuff just came out. Isn't that funny? So if this happens, that's a massive threat to you bulls. But you should be RWA. If we kick off and go long here, you should be long and strong. Dude, that was the funniest thing I've heard on the Squawk Box yet. Where was it? It had to be, was it this one?
Russia's central bank reserves dollar increased to 600 when feed the YC going to be from previous 682.8 BWA.
What? Oh my God, that is so funny. What? Yeah, obviously I'm drunk. Okay, you ready? Go! Go! What do you guys think? 15-minute chart? 30-minute chart? Wait. No. I know what it's doing. Oh, no. So the other thing it's changed. Hang on, I think I can fix this. Boo. Gold. Hang on, I'm trying to fix it. Videos, sound clip, media, image. Gold, wasn't it? Oh, no, I don't have gold. Must have gold somewhere. Oh, no. Oh, here we go. That doesn't look good. That doesn't look right. Hang on, trying to fix it. Hey, life's complicated. Upload image. It's still not. It's not working. It's just not uploading. I can't do it while I'm streaming. That's bull hockey. Malarkey. Well, anyways. So here we are. We're looking for, like well over 100 patterns here. And only one exists. It's bullish. And that last leg 3 hours ago on this 30-minute chart it was going to make it down to 33.33, and that's kind of where we are now. And therefore, if you're a bull, okay, you should be looking for this leg. Okay, but 3 hours ago, it was a threat. That threat has come to fruition and might develop into an opportunity. So you were warned about this 3 hours ago. Okay, and we got pretty close to that 33.33. If not, we hit it actually quite perfectly. And I think it's already turned green because this is already, this is a live chart, which is kind of interesting. I think it's already kicked off the target. But you have to understand, okay? Oh, and it's back to 22. So is it down to here? Cool. So if you're going to trade this pattern, I mean, it's not live, but it's pretty close to real time. Okay. If you're a bull, this is your primary zone. Okay. Okay. So that's what a bull's looking for. Now, if we breach this, then you might get a situation where TRADARS says, whoa, 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 like this. And it's showing you that breach is technically important. Massive threat to bulls, but plausibly an opportunity for bears, you see? So if you were a bear, you'd sell here or here because you'd pivot, right? Standard technical analysis. I can't get that gold. I'll have to play around with it. Yeah. So anyways, I did it on everything. So, what's happened is I said copy and then whatever. Nobody cares. So anyways, I got to go back and fix that. This is Forex.Today, brought to you by both TRADARS and Traders Way. In combination, we're the real deal, man. The Bloomberg terminal for retail Forex traders. But if let's say you like trading palladium or platinum, like, what? Yeah, did you know platinum's just rushing it? So gold and silver, yeah. But there's others. Yeah. And these markets are moving. How cool is that? Oh, it's very cool. And so we cover these things at traders.com. In fact, this morning I did a big blah, blah, blah on these exotics. It's very specific training on these exotics. Yeah. And we've had plans all year for these exotics. And you need, right? If you didn't know, now you know, So anyways, I hope you subscribe. I hope you download those chart patterns. It's in the description below. Like I said, there's no sales pitch. I just deliver them to you. You print them out, cut them out. Now you have a learning tool. So make sure you subscribe so that you can come to more of these. But we do hours and hours and hours of performance coaching every day at TRADARS. So if you need trading improvement, why don't you meet with David Pegler today? Huh? In fact, he's on at 20 minutes. Oh my God. Okay. Yeah. So we already did the London Open. I already did fundamentals. I just did the YouTube. David is taking over in 20 minutes to go over price action principles. Then I'm doing swing trading. Then tomorrow, like, oh my God. Okay. Oh, yeah. So if you're going to sign up for our prop fund, it's easy. You just become a member. And in the process of signing up for your membership, it asks you, do you want to join the prop fund? If you do, you do. If you don't, you don't. Simple enough. Cool thing about the prop fund is if this is for people that are actually successful. If you're not successful, don't join the prop. If you trade through us, we give you a spread rebate. Cool, great. But if you only got a couple of grand and you're still kind of learning the ropes and building your consistency, okay, use TRADARS, use our performance coaching and all that, use our tools. We'll make you a better trader. It's a matter of time. Great. And you get a rebate on your trading spread. That doesn't hurt, does it? No. But if you're actually a pretty decent trader, you get all that. Plus, if you're successful and you're trading enough, TRADARS actually, because we give you a cash rebate via PayPal, TRADARS actually ends up becoming either cheap or free. So if you're a reasonably good trader, imagine you get all of this every day and it's cheap or free. Michael's like, can U.S. traders do? Yes. The answer to that is yes. Yes. Doesn't matter where you are unless you're in Darfur. No. But Detroit, yes. Right? So there's just two programs here. You trade through us as you're learning the ropes. You have a small account. Fine. We give you a rebate and it makes trading a little cheaper, but you get sentiment, you get fundamentals, you get technicals, you get coaching. And your spread's a little cheaper. You get my chart templates. Like, dude, awesome. Now imagine all that and you're a pretty decent trader. And because of that, you're trading bigger volumes, right? Cool. Well, what if we just gave you your money back via PayPal? Okay. There is a limit to that, Grumpy Cat. I believe the limit is, I think it's 5 grand you put in, and then it's bumped up to 10 grand. Yeah. We ran into a lot of issues with compliance, right? So yeah, there were lots of different limits. Okay. Yeah, but it's in the details. Right. It's all spelled out when you sign up. Cool. So there are people in this room that right, that are part of the prop fund team. By the way, we have prop fund training too. But there are people subscribed to TRADARS, upgraded their account to include the prop fund. Yeah, I might be misspeaking, Grumpy Cat. I can't remember. Yeah, it might actually be that case. Sorry, I'm getting old. But there are people, here's what I'm saying, that are in the prop fund and they got the full rebate. So there are people here. Oh, thank you. Thank you, Jim. That they get all of this for free. They get 100% rebate back, so it doesn't cost them a penny. There are people here in this chat. Well, your spread is also narrowed, Grumpy Cat, and you would get TRADARS for free. It's just you max out, right? In that case. So what happens is, yeah, you would end up getting $10,000 in rebates. Yeah. Plus, you get $300 a month sent to your PayPal account. So it's still pretty good. $300 a month, $3,600 plus your spread rebate. So it's almost like $4,000. I'm guessing. I'm not making a promise. I'm like, I think that's what it adds up to, about $4,000. Plus, you get the service. You see what I mean, Grumpy Cat? So it's still good. All right, everybody. So that's that. That was awesome, babe. Like, I got to jump. Yeah, so I got to change this too. Not 200 in monthly rebates, 300. Yeah. 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 So, yeah, it's a little messy. Yeah, I had to go through a lot of compliance and stuff, and we finally got all that taken care of. So, everything's good. I just have to update the website. So, man, I got things to do, huh? Places to go. So, anyways, everybody should be in the program to either narrow your spread and make better investment decisions, right? Or to narrow your spread and get TRADARS, the trading platform, for free. Yeah, and it's time for David Pegler to take the microphone over inside of traders.com. So peace on earth. Actually, let me show you that just so you guys know where to go. Training. Okay. Cool. So peace on earth. May the pips be with you. May our profits be above average. Take it away, David.